Bank earnings in focus this morning. J.P. Morgan's third quarter earnings came in above expectations. The bank posted net revenue of $25.51 billion. That was above consensus. The earnings were $1.58. That was above consensus. And as a result, the stock is trading higher in the pre-market. That's a Dow component. It's helping the broader averages. We're also waiting to hear from Citigroup and Wells Fargo. Wells Fargo and Citigroup out right now. The earnings beat at Citigroup $1.24 versus $1.16 is the estimate on Citigroup. And Wells Fargo also coming out right now. We're looking at better earnings. Wells Fargo, we're waiting on those numbers. We will get you those numbers as soon as they hit the tape. But Citigroup, again, beating expectations. There's the market right here. We're expecting a higher opening from the broader averages. As you see, the Dow Industrial is expected to open up about 80 points today. We are pretty much near the highs of the morning. We will also get the latest reading on the September retail sales number. That's coming out in about 30 minutes. We'll bring that number to you. We got Michigan sentiment out, and we got inflation data, the PPI, coming out as well. Wells Fargo is also a beat. It's at $1.03 versus $1.01. On Wells Fargo. We'll see if Wells Fargo stock is trading higher as well. Those numbers just coming out right now. And we want to look at European markets because they're higher across the board as well. We had an upbeat reading on Chinese inflation, lifting markets there as well as in Asia. The markets in Europe are higher by 0.75% to almost 2%. Wells Fargo revenue is also a beat, by the way. Just getting these numbers right now, and we're going to bring them to you. In Asia overnight, the markets posted modest gains. Take a look at what we're looking at in terms of Asian markets, and they were higher across the board. We want to look at these bank earnings, James Freeman. Wells Fargo is also looking good, and we know the problems that Wells Fargo has been under, what they're facing. The stock is looking higher this morning, though, on these better-than-expected numbers. Yeah,
the news has been so bad. The political heat has been so heavy, but fundamentally, this scandal, it was not a huge financial problem for the bank. The costs of paying back the customers was basically not material. So I think we're seeing now, maybe investors will take another look at this stock and say, maybe Washington has overdone it a little bit here with the pile-on, given the problems at the bank. Yeah, the revenue was $22.3 billion. That was slightly better than the expectations. The J.P. Morgan number has that stock up. And, of course, as we've been saying, these low interest rates was the big problem for these banks, Dagen.
Right. Low interest rates, but then you look at all the other businesses that these banks are in, and in terms of the health of the consumer, in terms of the lending that's going on, I mean, it's pretty profitable if you're in the credit card business or making high-risk loans to people. I think that that's critically important here. But just think how much better that these numbers can be if you get slightly better net interest margin in the next year or so.
By the way, PNC is also out. They're also beating expectations. Really, it was not a bad quarter for the banks. You got J.P. Morgan, Citigroup, Wells Fargo, and PNC all beating expectations with their third quarter earnings. They are beating expectations, but those were low expectations coming in. So we mentioned how J.P. Morgan did beat the estimate, but lower earnings than last year. We'll see with some of these other ones when we get into the details, but you're still seeing, obviously, generally that slow growth economy, but also difficult time. You mentioned the interest rates, costs of regulation. This is a hard time to grow bank earnings. You know, when you look at the trading activity, the healthcare and the biotechs, as Dagen told us earlier, in terms of the ETF report, that's where the trouble has been because of this worry that if Hillary Clinton gets a sweep, if she's the president and the House and Senate goes to the Dems, you're going to see heavy regulation on all these companies. I wonder if that's going to carry over to the financials as well.
The whole country will be a different place if that happens.
Yeah. And I think this month you could see a real hit to the equity markets if investors decide that you are getting a Democratic House and a Democratic Senate along with Hillary Clinton as president. If that scenario plays out, very difficult to see how the markets stay at the level they are.
So what's at stake? Regulation, Supreme Court.
And it, really, it's about growth.
Regulations, you know, gun rights, of course, also. That's
regulations that hurt job creation, but broadly speaking, that changes the fabric of the nation in terms of greater. I mean, if Hillary Clinton wins, it's going to be a public option for Obamacare, at least initially. It's going to be fossil fuels getting completely crushed in this country.
Higher taxes.
And higher taxes.
Yeah, we'll see what that does to the economy, James, because we want to look at Hillary Clinton right now leading Donald Trump in the latest Fox News poll. We've got 25 days left until the election. Blake Berman is in Washington right now. Blake, jump in here. You've got the very latest on where we stand.